Welcome to Good for Bitcoin, a weekly show recorded live every Friday, where we recap the top events of the week and talk about everything that is good for Bitcoin. If it's built on Bitcoin, then it's good for Bitcoin. Let's get started.
Shared on this podcast is for informational and entertainment purposes only. It does not constitute financial, investment, or legal advice. The views and opinions expressed are those of the host and guests and do not reflect the official policy or position of any other agency, organization, or company. We encourage you to conduct your own research and consult with a qualified professional before making any financial decisions.
Well, hello, everybody, and welcome to Good for Bitcoin. My name is Brandon, co-host of the show. Kate, happy Friday, happy Thursday, because we are not recording on a Friday today. Happy Thursday.
It's weird. We got our schedule all mixed up, but yes, happy Thursday. Brandon and I are going to be traveling to Buenos Aires tomorrow, so we had to bump up the show.
Yeah, very excited for that. I'm so in the motions just saying that it's Friday, even though it's not. It's a rainy
script unlocked.
I know. It's a rainy day here in California, so I'm excited to head down south and enjoy some nicer weather. It's a very special week because we have Dylan here, who is co-founder of Bitflow. Dylan's going to walk us through HODLMM. HODLMM. I still don't know how to say it right. What's the right way to say it, Dylan?
Well, let's see, Kate. How would you say it?
HODLMM.
HODLMM. It's tasty.
Wrong answers only.
Yeah.
Right. Yeah, the HODLMM is how we say it. But yeah, I like HODLMM. It's pretty good.
Well, we're very excited to chat about HODLMM today. And I also wanted to talk to you a little bit about Clarity 4, because that was a big launch that happened just the other day. And a lot of really exciting things happening in the Stacks ecosystem right now. So maybe I'll just throw it back to you, Dylan, if you want to maybe just introduce yourself a little bit, and then we can get into HODLMM. I think you should have the ability to share your screen. We're going to get a live demo, I believe, from you. Hopefully I'm not surprising you with that. I think that was something that we talked about with Big Mac yesterday, but we'd love to hear a little bit more about it. And the floor is yours.
Yeah. So, hey, everybody that's listening in. My name's Dylan. I am the CEO, co-founder of Bitflow. We are building a pretty great DEX. It's very tasty DEX, the HODLMM on Bitcoin. And I would say our mission is to really help popularize and expand Bitcoin capital markets. I think a lot of the focus in DeFi, and rightfully so for Bitcoin DeFi, has been about borrowing against Bitcoin as this pristine collateral. But for that to live in a DeFi world, you also have to have Bitcoin markets where you can trade for that asset, or if the price changes, right, where you can process liquidations. So I think there's a fun question that's exciting for us, I guess, as like entrepreneurs and builders. Like, is the ceiling for a Bitcoin DEX like just there to really process liquidations, or is it something bigger, right? If you think about maybe 10 years from now, will more markets like Bitcoin will still be around? We're pretty confident about that. Will more and more markets be denominated in BTC? We don't think that kind of thing is going to happen like overnight, and it's a big lift to build out that infrastructure and to make a DEX where Bitcoin feels like a first-class citizen. But it's fun. And the HODLMM is the best thing we've ever built. So I can't wait to share it with you guys and just keep getting more feedback from people.
It's awesome. Making me excited. I want to take a step back. I feel like even this term of like Bitcoin capital markets gets thrown around a lot. And I don't know if it's like been defined as well as it maybe could have with like maybe the people listening, like people in the community. What is like Bitcoin capital markets? Could you like define that for us?
Sure. Yeah. I don't know if it really exists too much yet. We're trying to build it. Almost, every trading pair that you'll see, is denominated in USD. It's the global reserve currency. For Bitcoin to like overtake that someday, it's not just going to happen, right? We do have to have like better infrastructure. It won't happen overnight, and it'll be very profit motivated as well. Like that transition. And I think, if you're looking to market make some token against USD, right? Like as a market maker normally would, I think there's a question of like, could they be much more profitable if they were holding two different assets that they expect to appreciate long term, right? Instead of just one. So yeah, I think if that transition is going to be profit motivated, like you'd probably like to be trading and earning with equities, tokenized equities and Bitcoin in the same DEX. And over time, I think we're going to see more and more of that. You kind of already see like where like a lot of this infrastructure is built out really well. But you might see all sorts of different tokens trading against the native asset of the chain that you're on. So on Ethereum, right, against ETH, or on Solana, right, trading against Sol. But yeah, nobody's really nailed the trading UX for Bitcoin yet, I think, except for us.
Does it exist currently on Solana or ETH? Like, are you building something comparative to what already exists, just better?
Yeah. And in many ways, it's like infinitely better than the stuff that exists in the Bitcoin ecosystem right now, which is like only the Uni V2 level AMMs like that. And yeah, we've taken some inspiration for sure from Meteora, their DLMM style liquidity pools. Like that was good enough for a president to launch a meme coin on, which is insane. I think most people in crypto were like, I guess caught off guard. They were at the ball in DC, and they're like, "Oh, let me get to a computer." Everyone's scrambling to try to make that trade. It's just crazy volume being processed. So, and really, really precise tools for how you might want to launch a coin, or like how much you put in each price bin. So we get all that great stuff that they have on Solana now on Stacks. And yeah, but how you implement that with Bitcoin matters a lot, because it's tough to make, that UX feel like magic. But that's one of the superpowers that, we have on Stacks, is when you're bringing these assets here from the L1, whether it's through like the native SBDC bridge, you can do that in 2 blocks, or with Pontus, you can do that in 1 block. I think having that where you can bring Bitcoin to Stacks within 1 block, and then if there's any kind of reorg, right, the mint on Stacks also gets reorged, right? So you have that protection in place. If you combine that with concentrated liquidity infrastructure, like the best in class that you would see on Solana or Ethereum, then that's like the secret sauce for how you make Bitcoin DeFi feel like magic.
This show is all about context, and I just want to this is a really big deal, so I just want to put it into context with what Bitflow has already had in market in terms of trading and being like an aggregator of sorts. Could you just give a little bit of context on sort of what Bitflow has been or what has offered in the past, and sort of bring that into now what this new product is going to offer that wasn't available before on the platform?
Yeah, we've had most of our success, like the bulk of it has come from trying to be helpful to other protocols, and that's kind of how we carved out a name for ourselves. My co-founder and I were kind of insiders when we first got the Stacks. I wasted a year building something that I thought was personally interesting, but nobody cared about it at the time, and it was a way to borrow against Bitcoin, but for more supply chain purposes, to optimize your cash flow, helping companies use that, which at the time interest rates were so low, it's no demand for that product really. But things have changed since the ZERP environment. So but yeah, so that was a painful lesson. I think some of the other builders across the Bitcoin ecosystem are still learning that, hey, I want to build this L2 my way because blah 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 technical reasons, I think it's superior, and if I build it this way, people will care about it. And that's, I think, backwards. And starting from just not being afraid to take user feedback, and know that maybe you don't have the answer for what people want Bitcoin markets to look like, but if you're willing to put in the hard work to talk to different protocols or different market makers about what they would care about for a better native Bitcoin trading experience, or a Bitcoin trading experience on a scaling solution. So all that said, it's helped us to help out other people. So we started off doing stable swaps for the Stacks ecosystem. That was something that was missing. And I think it was Christmas Eve in 2023 when we deployed the first Stacks, ST Stacks stable swap pool. and that got up to like 50 million in TVL at one point. And the stacking DAO guys were like, hey, that's great that you did that, but like, can you please connect this to all the other tokens in the ecosystem, please? Like, people don't want to just go to Bitflow just to trade that one pair. And like, okay, of course we need to do that. So that's what led us to build the aggregator. So, you could swap on Bitflow, but you can also get the best rate on like Velar or Alex. And I think people just didn't want to have to go to 3 different places, so they started using us. And then I think there was like a need in the ecosystem to build some of the DEX infrastructure in a little bit of a different way, where we keep the liquidity in like separated, like for each pair, a separate isolated pool. It's just like a more safe and secure way to have that architecture for your DEX. So we built some of the Uniswap V2 stuff, and we worked with the Pontus team and like 15 other quality Bitcoin layer 2 signers to try to bring runes to stacks. And we did that. Again, it's like this lesson of just because you think it's great doesn't mean the market will. Like these Uni V2 style pools were just like, you have like actually zero price controls. It's really bad. Like you just provide the liquidity, and people are really careful with what they do with their Bitcoin. Right? They don't necessarily want to just, use that level of infrastructure with no controls, and they come back and they're wrecked on impermanent loss or something. So yeah, we took some time and said, okay, this concentrated liquidity design, and there's many different designs, but we think this one's going to be really great. I could talk a little bit about what concentrated liquidity is, but if I'm putting you guys to sleep, stop me at any point. Okay.
No, this is super helpful. I'll just say like, yeah, like that's like the aggregator, the DEX aggregator. That's how like I personally like started using Bitflow, like especially working at Leather at the time, like Leather integrated the DEX aggregator in, and and you can swap directly within Leather, but it was using Bitflow on the back end to power that experience. So that's how I like got the context of what Bitflow is and what it can do. And certainly I mean there was certainly a lot of attention, especially with the dog coin. You guys continue to do, I think, a lot with the dog community on stuff there, but I don't know. Kate, go ahead. I think you had something.
No, I was going to say, please tell us about concentrated liquidity. I'm curious.
Yeah. Well, it's concentrated liquidity is like a way basically for you to earn more with like the same amount of capital, or even less capital, honestly. So think maybe an analogy that someone on our team came up with is like you could maybe think about trying to grow crops, like, and if you did all the land in the US or like in the world or something, like there's going to be so much terrain where you're not going to get a good yield on your crops. You're just spreading out your effort, you're spreading yourself thin, and you'd be much better off focusing on just a couple of areas where like you're going to grow more stuff. So legacy AMMs are very similar to like spreading yourself too thin. The money is spread out across like the entire price curve. A lot of it isn't actually useful. Pretty quantifiable, like how much better it is. Like you have to have 800x TVL in that pool relative to the swap that you're trying to do. So if you're trying to do like a 100K swap, you need to have 800x times that in order to keep your slippage below 0.5%, which is like terrible for anybody that wants to come in and pick up a position like with size. But this new infrastructure is very different. And I get, we'll be doing a little demo today, right? So I'll show you exactly how it works. But it's got you have like just very sharp like precision tools to decide like, hey, I want to provide liquidity between these this price ranges, or maybe I only want to do it single sided, right? Maybe I just want to provide some Bitcoin from 100K up to 200K, and that's my way of like getting out. I'm just going to leave that liquidity there, and people can buy into it, and it'll be converted into whatever the other token is, like USDC, and that's one way to like DCA out of a position. So there's a lot of room for creativity, and how you implement this I think really matters. So we've got this campaign that we're working on, and the UX needs to be polished a little bit more. We've got some good feedback, but the goal is to help people think more in shapes than in numbers. So like, what's your favorite stock?
Well, the one that always comes to mind is Tesla.
Stock. Yeah, okay, Tesla.
Yeah,
right?
That's the easiest one.
And the guy's building a robot army. It's fantastic. They're dancing on stage. So yeah, what's the price of, do you know like roughly ballpark what the price of Tesla is?
No, but I can tell you.
Okay. Well,
It
I can,
is.
yeah,
Oh, that wrong ticker. Sorry. Keep going.
wrong ticker. Sure.
Three
Well,
ninety eight.
398. Okay. So what's the price of that in Bitcoin? I mean, like you're like a crazy person if you know that off the top of your head, right?
Yeah,
And then like,
I'm like, how would I even figure that out?
yeah. So if you did see what the number was, you're going to see a lot of zeros. And, like our monkey brains don't like to deal with that many zeros. So when you're thinking about like, all right, we're trying to expand Bitcoin markets for things like that. But how do you price things in Bitcoin in a way that doesn't hurt our brain? How do you help people visualize like where they could supply liquidity without looking at all those zeros? And I think that what we've come up with is we've taken some inspiration from Meteora, some from Uniswap v3, and I think it's a really beautiful way to combine naturally what you would think about. So yeah, maybe without further ado, I'll try to share my screen here.
Yeah, let's get into it. I'm excited to see this. You've set the stage really well. I want to know how you're supposed to wrap your head around all these zeros, Dylan.
Yeah, I'll just say while you're pulling up the share, I have really appreciated like a lot of the marketing that you guys have been doing with the spreads and maybe when you're trading like $10, it doesn't matter as much, if there's like a 1% spread or like a 2% spread, but if you're trading larger, amounts, that eats into your profits very quickly. So this is certainly a pain point that traders feel. So I'm really excited to learn more about this.
That's true. I really have been talking only on the liquidity provider side, but it is very beneficial for traders too, especially the little guy actually, because if you're doing a trade that falls inside of the current active bin, it's actually zero slippage for you, which is nice.
Yeah, that's huge.
So, big win for average Joe. And yeah, I think we kind of went over the numbers earlier, I guess, but 800x, like that's like very quantifiable how much better it is. And that was only to keep it below 0.5%. So yeah, I think it's great for traders. It's great for liquidity providers. The honest trade-off is that this is an order book style AMM, so it's requires more active management. But you get to reap the benefits because you make more with less capital. The slippage is better, all that good stuff. So let's take a look at maybe this pool right here. Let's try the dog pool. Dog and TBTC. These are mock tokens, by the way. This is already live on mainnet. So this is the early access, what you'd be seeing here. So if we zoom in, you can kind of see like this chart here. We want to help people shape their strategy, right? So this is my position. You can see I've got a little warning sign actually. It lets me know, hey, you're out of range. So if I zoom in some more, you can see that the position itself is actually, all my capital is down here, but it's trading actively up here. If we go and look at the pool liquidity, you can see that it's spread out like this, and this would be very bullish, I think, for the dog token, right? You have dog here in green, you have SBTC here in the pool. But yeah, it looks like there's not that much dog token left in the pool. So people have been buying it up in the early access. So when you're thinking about like where you might want to provide liquidity, like, I don't know if you guys have looked at it yet, but you maybe haven't even looked at this part of the screen right here. Like these are the numbers that would be really hard to wrap your head around. Like what is the price of a dog token denominated in BTC? So we use this little format here, like to show you like how many, I'm zoomed in a lot just to show like that's how many zeros there would be, that little 7 up above it, right? But it almost doesn't matter so much because if you like zoom in a bit, you can see, okay, lately the trading activity has been happening around here. Right, so I'm going to narrow my range rather than the full range. I'm going to do like maybe plus or minus 3. That's a little bit low. Maybe I'll do plus or minus 8%, right? And maybe I'm only going to be in this pool for a day and see how much I can earn today. So I can zoom in a bit more here, and you'll see that this shows you dynamically, like as you're scrolling, like much more zoomed into the area that matters for you. Now I get to play with these 3 buttons down here where if I want to experiment with adding some liquidity, let's say I want to do, I don't know if I have this much test dog, but let's kind of act like I'm going to, do a bunch of liquidity here. Or maybe What was that, 15? More big numbers. There we go. You can take a look at like the different shapes you can add here. Like this one is like spot, so it's a uniform distribution. This one is curve, right? So it's got like more centered around like where the active in is today. And then you also have a bid ask strategy as well, which helps you capture more volatility if there's a lot of liquidity here. Yeah. So the thinking is when you show up to a page like this, you're like, okay, what price even is this thing, right? So you get this view where you get to see the volatility over some time period. It could be a couple of hours, it could be a day, it could be the minute view, right? And then you might want to know, okay, well, where does everybody else have their money, right? So that's what you get when you look at the pool liquidity graph. A little bit of social proof so that you're not like alone on an island providing liquidity there, unless you think that's a smart place to be because maybe the price will move there. And then yeah, so then you get to say like how much and then like what shape makes sense for you. Do you want to use a shape that'll capture more volatility, a shape that's more centered around like a price that you feel is not going to move that much? Like something like this would be great for stable coins, for example. Or, maybe you don't want to, you're not sure, so you just want to provide a uniform distribution across. So that is the first little sneak peek of it.
So it's just,
and yeah,
just to make sure I understand. So it's sort of like, yeah, you care like a little bit less about what the actual price is that it's trading at. It's more like what is sort of the range that it's been trading. Like, has it gone up a couple percentage points or down a couple percentage points in the past X amount of hours or X amount of days? And then based on that, I'm making a decision on, okay, I want to deploy this much amount of capital into the pool to trade on that. And you're thinking more of it, yeah, based on percentages versus like, oh, I want to trade at 0.00000009 whatever, right?
yeah, exactly. Yeah. And one of the things we did for this pool specifically is that you could, like, we flipped the ratio. So it's instead of a BTC USDC pool, it's USDC, BTC. Like people, I'm sure a lot of our friends know like what the Bitcoin price is today, but what about, the other way? If you flip that on its head, like I was like looking at the graph and seeing, the dollar, versus Bitcoin just going down over time. And then, if you're worried about the price action today, you zoom out, you look at that and you're like, all right, I'm making a good decision.
Right. We're on a Bitcoin standard here.
Yeah.
Yeah. Yeah. So yeah, it helps demonstrate like we can have markets that are denominated in BTC. We can make it a lot more visual. And I think putting the volatility next to like the social proof of where other people have their money, like lets you know, like, okay, people are farming in this range, or there's an opportunity here for me where they're not farming yet. And like I think it's a more natural flow than like trying to look up, right, the price of Tesla was this, in USD, and the price of Bitcoin was this in USD. Now I've got to do some math in my head to try to create that market. Like that's tough. So yeah, just to see the price change over time, to know, and in that same graph, see where it might be a good idea to add liquidity, and just be able to like drag and drop super easily. Like if you are adding a bunch of liquidity here, it's nice to see like how it can change. Like when you're just dragging this, right? Like that makes it, go out further, or this kind of like bunches it up closer to where you were thinking about adding it. So if you wanted that shape to be a little bit more round up there, you could do that. So should be a lot of creative freedom here for people to play around with a bunch of different strategies. This thing is going to launch pretty soon. We're excited about it. We're 2 audits down. We have one more to go. We'll be doing a few different campaigns for it. One of them, are you guys familiar with Meteora, like the LP army at all? Okay. Yeah.
Enlighten us.
Well, you got to check it out. Yeah, it's like a great community tool where people have built stuff on top of Meteora. We would love for more people to build stuff on top of Bitflow as well. Only so much we can do in a single day, but yeah, I think we'll be coming out with the BFF Army site soon. So it'll be a community resource where people can help have educational resources and tutorials to say like, hey, here's like an earning strategy that I did with bid ask in a dog BTC pool, and this really worked well for me in this case. But I was only in the position for an hour, so I was really closely monitoring it. Or this other one, this worked great for me. I was in a stable swap pool with two different flavors of Bitcoin. And I just did the curve strategy because I know it's going to come back to one-to-one at some point when somebody arbs it. It's something very low management. I think it'll be a great website to help people like understand the strategies a little bit better. Because this stuff is, being a market maker is not easy. But I think with the right tools, we can help people visualize it in a way where it becomes a lot friendlier.
Yeah, I love that approach. And you guys have such a great community. I can imagine a lot of power users are going to really lean into that. People love to watch other people's trading strategies and what the thought process behind it. So that's super cool that you guys will be launching that.
It will be pretty easy to just look up an address and see like how profitable their strategy is, and
Yeah.
then to set up our own like Pelosi trackers for that type of thing.
The chain don't lie.
Yeah. That's right.
Oh, that's awesome.
So Dylan, if somebody wants to try this out, where is the best way for them to go to get early access?
Well, we've doxed the link up here at the top. So it's hodl.bitflow.finance, hodlmm.bitflow.finance. And, but if you are not on the early access, whitelist yet, it is going to redirect you back to the main site. So, for all of our BFFs out there, just a DM away, hit me up, hit Diego up. We'll get you guys to the top of the wait list, and we're limiting it to, I think just about 100 people, 200 people right now, focusing on some communities, some instructors that we want to help spread the word about it. And then we'll be opening up to a much wider audience, I guess, pretty soon. And our target launch date is in early December. So final leg with that last audit, and I think this is going to be like so huge for everybody in like the Stacks ecosystem, even if like it's a different protocol, right? It's not just a Bitflow thing. This is like orders of magnitude, like infinitely more capital efficient. I always like to say that Stacks, like Clarity feels like, DeFi for grownups with post conditions, but now we really have all the tools. We have all these catalysts coming together at the right time. And I think the sentiment could not be worse. But I don't know. I'm excited. I didn't sleep last night. Diego had a demo with the dog army today. I was pumped to show them what we built and get their feedback. So, hopefully this will be, I don't know, more people will be happy about something cool in the Bitcoin ecosystem.
Yeah, there is so much to be excited about. I mean, that's what we cover on this show every week, is like talking about all the really amazing, like exciting things being built. But it's actually a really great segue into, I wanted to ask you a little bit more about Clarity with the updates that just came out. For those that don't know, Dylan has the StacksDeveloper username on X, the best StacksDeveloper username you could probably have, which is literally at StacksDeveloper. So he is the person that is qualified to answer questions about this because he has the username. But could something like this, like HODLMM, have been built without Clarity 4? And I guess what are some of the updates in Clarity 4 that you were most excited about?
Mm-hmm. Yeah, it's funny that you say that. I got the StacksDeveloper handle, I don't know, maybe like right when Stacks 2.0 came out, right? And really initially my goal was just to help like retweet a lot of stuff and spread the word, and try to make sure the developers had like resources to know about all the cool stuff that was being built. And it's turned into, I guess, all this. So it's cool to get involved early on. To answer your question, we did actually deploy this before Clarity 4 launched on mainnet. There are components of it that don't require the changes, but there are other aspects of Clarity 4 that we feel make this even, just provides additional layers of security for what we built. So one of the big changes that I guess it was really, I think, maybe one line of code change, but but it feels like a big security change, is the ability to do pool verification. So this means that we use this new function called code body of, and it allows you to check the hash of a contract that's been deployed. So you can think maybe we have like this core contract at the top that's like an orchestrator for how you swap and add liquidity. And then you have these pool contracts. Each one has like isolated tokens inside of it. And for every pool, right, there's a new smart contract. So now with that new function, we get to say that new smart contract that was deployed, like exactly like down to the spacing, matches exactly what the template was supposed to be. So this allows you to have standard pool template contracts that are safe and secure. The engineer in me wants to caveat that, right, and say like that's pool verification and that's different than token verification. But because token verification is not the same for like every token is different, right? So, but we don't want to be like the gatekeepers of what pools are allowed and what tokens are allowed. This is a protocol that we want to live on, like long after us, and I think that's true. I think a lot of the people in Stacks feel that way, like long-term games, long-term people. That's why we build on Bitcoin.
Yeah.
We like this permissionless technology, and so yeah, I think we don't want to be the arbiters of that. So even if a pool is not verified, you can actually still create it, right? But it's the things that you can build on top. You can feel much safer that no, I want to make sure that I'm only trading through verified pools. Or if there's another service that somebody builds on top of Bitflow, maybe we build it that says it's a verified token. I'm only trading through verified tokens. You can do that through peripheral contracts as well. So yeah, it's just like very true to Stacks, trying to build things the right way and make it safer.
Yeah, I was seeing some people that were talking about the balancer hack that happened a few weeks ago, and they were saying that something like Clarity 4, that ability to verify pools could have prevented something like that. I'm not technical enough to know if that's true or not. I'm sure there's more of it's not like a yes or no there. I'm sure there's a gray area, but
I think it could be, yeah. And it's crazy also just how long it was out there, right? A lot of these contracts, Bitcoin DeFi is still really young. So, anything that has any kind of Lindy effect, I think just now starting to feel better about, because we've been live for a few years. We use the same core architecture for everything. So, no ability to move users' funds, right? But it's just it's kind of crazy that for a contract in Ethereum to have been live that long and still experience an exploit. So yeah, all these additional protections that you build in, like that's the stuff that makes it feel like DeFi for grown-ups.
Absolutely.
I love it. Long-term games with long-term people. I think I'm going to be stealing that one.
I think I stole it from Naval or somebody.
Sounds like him. That's funny. Well,
good.
That was a great overview. Yeah.
Yeah, I'm excited. It sounds like we don't have too long to wait for the launch. So, I mean, within the next few weeks, we might be live. So that's very exciting to hear. Again, yeah, hit up Bitflow. They also have their new username, which is just at Bitflow on X now. You guys got the shorter handle, which is very cool. So go follow Bitflow at Bitflow on X. Go ask them for access. Don't just go to the URL, because you need to get whitelisted and you need to get added to the group chats so you can provide feedback. So I'll give some due diligence there to go through it the right way. But
yeah, thank you for the plug. I think the demo today was like, even the feedback that we've already gotten from users, I know it's going to be so much better. Like when you click on that pool page, you're going to see the chart right away. You're going to be able to, without having to enter amounts, just click on those 3 buttons and see what the shapes do. And getting people to that point where they're shaping their strategy, like seeing that right away is going to make a big difference. And maybe it's naive, but like I think there's a real chance that this could be like the best UX for concentrated liquidity anywhere in DeFi. The more that we keep tweaking it and getting this user feedback, just having that strategy, it's like the best of both Meteora and Uniswap v3 UX in one. So yeah, all the feedback that you guys out there give, I mean, it like really can make a huge difference on like the success of this product launch. And yeah, I think I started this chat by saying that I learned a while ago it doesn't really matter so much what I think. It matters more what the users think. So can't wait to share this with you guys and to hear all the things you love about it that you don't love about it. Yeah, the HODLMM brought to you by Bitflow.
Well, I'm going to copyright that.
Yeah, thank you for joining us. It's been great for anybody that is listening in. Normally, Kate and I recap the news, so I think we're gonna segue into doing some rapid fire news of the week. Dylan, you're welcome to stick around if you want to, but you certainly don't have to.
I love you guys. I'm gonna go take a nap. Have a good one.
That sounds great.
Bye, Dylan. Thanks so much.
Yeah, thanks so much for joining. Very cool. I'm excited for HODLMM. HODLMM.
Yeah.
As
I'm excited to see their army, their Bitflow army get going, and people being able to emulate different strategies. I think that's such a cool approach, and just I mean, very on brand for them, but I mean, traders love to look at other traders. So that's so cool.
Well, let's get into some news. We have some strategy news to talk about. Of course, they bought some more Bitcoin, but how they bought the Bitcoin is what is interesting this week. So they bought 487 BTC and they used their preferred equity to do it, not MSTR dilution. So last week on the show, we talked about how STRC surpassed $100 per share, which basically allows them to use the proceeds. Anything beyond $100, they can use the proceeds of that to take and buy more Bitcoin. And they did that. So they bought that 487 BTC using 262,000 shares of STRC. But they have more than just that one. So they also use like 165,000 of STRF and 1,000 of STRK and 1,000 of STRD. And their AI generated plan is working. They're buying more Bitcoin using these other instruments without diluting their main stock, MSTR. So pretty cool stuff.
Very cool. Then we also had Strive. They bought a little over 1,500 BTC using their oversubscribed SATA IPO.
Yeah, so very similar to what Strategy is doing. Basically, Strive is doing a similar thing. So yeah, the instruments are working, I guess, is the main takeaway there.
All right, let's get into the news. We've had some honestly pretty interesting stories this week from my perspective. I thought it was pretty cool. So do you want to kick us off with Coinbase leaving Delaware?
Yeah, this one's kind of a smaller update, but yeah, Coinbase announced this week that they were leaving Delaware. They're reincorporating in Texas. Their chief legal officer, Paul Gruel, said in the blog post that they published, it said, Texas has become an increasingly attractive hub for innovative companies like ours. It is a shame that it has come to this, but Delaware has left us with little choice. And there's been a lot of companies that have been leaving Delaware, moving to Texas and other states. I think we've talked a little bit about it on the show. I think Tesla did the same thing, and other companies have followed suit, but there's been like issues with like inconsistency, I think, with litigation in Delaware. So it's become like just a lot less friendly for corporations to be there. So they're moving to other states.
Is that corporations in general or just crypto?
I think it's like corporations in general.
Yeah.
Yeah. Like Delaware used to just be like a haven for like any company was like incorporated in Delaware, even if they like didn't have like offices there. And yeah, that is changing for sure.
All right. Do you want to do the next one?
Yeah. Next one is Square Bitcoin goes live. We talked about this on the show a few weeks ago when they announced it, but it is now officially live. So for merchants, they can now accept BTC payments over Lightning. So customers are paying with Lightning. Merchants are either converting that to fiat, or they can keep it in Bitcoin, or they can take a percentage and do like 50-50 or 60-40 or whatever. And there are no fees on that until the end of 2026. So really, really cool. I think what's most attractive about this is through their product Square Bitcoin, even if merchants are receiving money in fiat, they can have some of that converted to Bitcoin. So I think that to me sounds like the cooler kind of strategy is if you are a seller on Square, you can now DCA into Bitcoin or take some of your profits and put it directly into Bitcoin for savings. And that is really cool.
Yep. Love that.
They also announced, Cash App announced this new map feature that helps you find businesses and, so you can see like businesses in your area that you might want to support that are supporting this. So pretty cool stuff.
Oh, that's cool. Is that live right now or they're
I think so. I need to check it out myself, but yeah.
Awesome. Okay, next then there's a security lab that comes out of Bybit. It's called Lazarus. And they did this report and they analyzed 166 blockchains and found 16 of them that can freeze or restrict user funds at the protocol level, which is obviously a huge no-no when we're working with decentralized blockchains. So they can use mechanisms like hard coding blacklists, validator controlled config files, or on-chain smart contracts. And so they found 16 that can do this, and then they found 19 that have the potential to add similar controls if they just made minor changes. So, obviously if the chain can freeze your funds, even if they have the best intentions, They are obviously the ones who own the network, and it is not a true decentralized ecosystem. I think what's scary is like, how are you as a user really supposed to know that this is happening, that this exists, unless you're really, in the GitHub files or the repos, or you can read, the smart contracts or the code. It doesn't exist in your wallet UI. Like, you just don't know that this is happening. So not fun.
Yeah, I think that's something that I was more surprised by. Like, I understand that some of these blockchains may want to do that. Stablecoins would be a prime example of like any stablecoin out there has the ability to do this. But this is not, I don't think even stablecoins were included in this. This is just like decentralized or quote unquote decentralized blockchains that also have the ability to do this and to freeze user funds. And I was surprised that there were so many where they had the ability to do this, but not on like a smart contract or not like on the blockchain level. Like, they can just like edit a GitHub file and then that somehow freezes funds on a wallet address, which is pretty arbitrary and pretty scary, honestly.
Next one obviously brought the hype for Zcash.
We're transitioning slowly to a Zcash show.
That's what I'm saying. Good for Zcash. It's coming soon. Leap Therapeutics. So they are traditionally a company that develops therapies for cancer patients. And they rebranded as Cypherpunk Technologies with the help from the Winklevoss twins. And after they did this rebrand, they immediately bought $50 million worth of Zcash, which is obviously one of the boldest pivots a public company has ever done. And after this happened, the market rallied big time around it. Their stock exploded 170% in one day. So I found this because Tyler Winklevoss, one of the twins, made this big post, I think yesterday or the day before, basically coming out and saying why they're doing this, why they're such proponents of Zcash, how privacy is the foundation of freedom. And, they're claiming that they're losing it fast as everything moves online. And so their whole mission is to invest in and build tools that protect personal sovereignty. And obviously they're betting big on Zcash. So this is crazy. I don't know. It's fun to watch play out. Like, obviously they're big Bitcoiners. They say like they think Bitcoin's going to 1 million over the next decade. And they just think that Zcash is going to rise along with it. And they view Bitcoin as digital gold, while Zcash kind of becomes the private way you move value, which obviously becomes super important in this age of AI and surveillance and, all of that stuff.
Yeah, I'm really interested to see just how this privacy narrative plays out. It's obviously like privacy is like a core like right, I think. But just in terms of like how markets value it, I think we'll see, is this just like a premium that the market is placing on privacy now, and then they're going to move on to the next thing, in 6 months, or it's hard to know, where the price of Zcash is going to be. But certainly it just keeps going up.
Yeah.
Over the past few months. But certainly privacy has a role to play, I think, forever. But it's just, it's going to be interesting to see how long this lasts, or if it's just a continuous thing.
Yeah, people talk about how this is all, like, the narrative always comes back around privacy. But Zcash has been operating for like 9 years or something like that. And it's really having its moment right now.
Yeah, certainly is.
Did you see this next one around lava?
I saw Jake posting about this, and I think he interviewed somebody from the Lava team, and I need to watch that interview. But
yeah,
I wasn't aware of this until I saw Jake posting about it, and this was surprising to me also.
I saw this one in the block space. I think it was like in their newsletter or just like a article that they posted. But basically, Lava quietly switched their trust mode from non-custodial DLC based Bitcoin loans to a full custodial model. So it's like institutional grade custody. And the big part of this story is that their users really only learned about this after they migrated their vaults through an app update. And it really did not disclose the change or what was happening. So a lot of people after the fact realized what was happening. And obviously they felt pretty blindsided and just, like obviously thrown off guard. You can't just change your custody trust models like that without letting people know. And it also comes at a time when the company's announcing a $200 million raise. So obviously some red flags or suspicions are arising, that this is happening at the same time that this funding is coming in. You know, the company's claiming that this shift is going to improve their security, lower rates, but obviously for a lot of Bitcoiners, this was kind of a bait and switch, and it really breaks the brand's promise that they signed up for. So it's really, this issue is around the lack of transparency of the switch. You know, obviously self-custody is a huge thing for Bitcoiners, and that's probably why a lot of people use the Lava product, but it's really, just the lack of communication where it feels like it was, you know, a bait and switch and not really communicated to the customers what was happening. So,
yeah, I think I was having a conversation with Jake on DLCs the other day, and I think DLCs are sometimes like regarded as like this ultra decentralized thing, but DLCs are still powered by oracles, and oracles are like, it's impossible for an oracle to be fully decentralized. Like they have to be centralized. So even something like, if it's DLC based, like there's still oracles that are in the background that are controlling, you know, the price. A lot of DeFi hacks, probably the majority, I think, of DeFi hacks that have happened in crypto have been like targeting oracles and price manipulation and stuff like that to liquidate or allow things.
Yep.
So DLCs aren't like the savior of, you know,
self-custody.
fully decentralized lending.
Yeah.
There's certainly like, you know, if you are a lender and you are the one that is operating the oracles, that's, you know, much less decentralized than maybe you're using a trusted oracle provider like Pith. You know, is one of the big price oracle providers out there. So certainly using a third party oracle is preferred, but there's always just a level of spectrum when it comes to centralization with these lenders. And there's no way to, I don't want to say there's no way, but like there's always some kind of centralization because you have oracles powering it. Even something that is, you know, smart contract based is using oracles, like Granite is using Pith, right?
Yeah.
And Pith is very trusted and everything like that. And others, Zest, I think, is also using them. So yeah, that's all. I just wanted to say, like, DLCs are not fully decentralized either, but yeah, certainly you don't want to be changing your trust model like this without letting your users know.
Yeah, I think maybe changing anything, like obviously this is a big one, but like I just think the industry that we work in, being as open and honest about any changes, regardless of how big or small they are, to just let people know, like those are the little reassurances that build a lot of confidence and trust, you know, whether it's good or bad. Just being transparent about it is, I think, just fundamental.
100%. Yeah. This one I thought was pretty cool. So SoFi has launched SoFi Crypto, and with this, they have now become the first regulated national bank in the US to allow customers to buy crypto. That includes Bitcoin, ETH, and Sol directly from their checking account. And when I first read the story, I was a little confused because I thought that they already had this. And they actually did. So they used to offer crypto trading through a partnership with Coinbase all the way back in 2019. But they actually suspended the program in 2023. So I think just with the new administration and more clarity there, they have reintroduced this. And they are still now the first regulated national bank in the US to allow customers to buy crypto. So maybe we'll see JP Morgan soon. But for now, it's just SoFi.
Yeah, this is pretty cool. Really cool. And then the last one, is it the last one? Yeah, I think this is the last sort of news story. Maestro, I think that's how you pronounce it, launches Mesamine. I think that's how you pronounce that too. I'm actually not sure. They're kind of confusing words. But basically, this is a Bitcoin-denominated yield platform that lends idle institutional Bitcoin to miners through on-chain, over-collateralized credit facilities. So it's aiming to fix two big problems at once. The first one is that miners struggle to access capital without taking on US debt or dilution. And then the second one is, obviously, we talk about this a lot, over $2 trillion worth of Bitcoin sits idle, unused, not earning yield. So basically, this aims to let people who have a lot of idle Bitcoin lend it to miners safely, on-chain, fully backed by real assets like hash rate and energy equipment, and then miners desperately need capital, but getting loans is very expensive and usually is tied to the US dollar. So yeah, it's claiming it could also help decentralize mining by giving smaller operators more access to capital. It's pretty cool. It actually reminds me of Shopify used to like give loans to very small e-commerce businesses, and it would just like help them upstart their business and stuff. I don't know why it reminded me of this, but I think it's pretty cool. And you know, you gotta build products for the Bitcoiners that you want to see in the world. So seeing, you know, sort of like Bitcoin lending very much targeted at miners is a cool thing.
Yeah, I from my time when I was at BlockFi, BlockFi had this product where they were like specifically partnering with Bitcoin miners, and then the miners were using their mining equipment as collateral, which ended up being a huge problem because if you're a miner, for one, like, I mean, mining equipment is not liquid, right? Like it's in a warehouse somewhere, and like you can't just like immediately liquidate a mining equipment. But if you're at the point where you're needing to say like, oh, we need to liquidate this mining equipment, probably nobody really wants to buy mining equipment at that time.
Yeah.
It like that was like one of the one of the things that like caused BlockFi's downfall, I think, was like offering that solution. So I would be a little careful on collateralizing mining equipment, but otherwise this sounds cool.
Your BlockFi stories are always so wise.
Oh my
Maybe
gosh.
we're going to revisit this one eventually and you're going to say I told you so.
Yeah, certainly learned a lot from things on what not to do.
Yeah.
From watching things go down over there. There's a lot of good things too. A lot of good people that I worked with, but yeah, some questionable decisions also.
Very much so.
Well, like we said at the top of the show, it is Thursday, not Friday. Kate and I are both traveling out to Buenos Aires tomorrow. It's a long flight for both of us.
Yeah.
So I think we'll be acclimated and ready to go by like Sunday when a lot of the events start kicking off. Very excited to meet as many people as possible while we're there. And you're speaking at some events.
Yes,
right?
I'm speaking at SoFi. It's going to be all about Bitcoin, DeFi, institutions, future of on-chain finance. And I'm joined by a couple other girls. One is the founder of Decrypt. It's sort of like a DeFi news. It's not a magazine, but it's like an outlet. It's pretty cool. And then another girl in the Bitcoin world. So it should be a good panel. It's funny because like SoFi obviously covers the entire crypto ecosystem, and there's always a little segment for Bitcoin. So it's fun.
Yeah, I feel like we've done a lot of stuff with SoFi over the years. When we were like Trust Machines, we did some stuff with them as well.
Yep.
So yeah, it's cool to continue doing stuff with SoFi. And then I'm hosting, or not hosting, but I'll be speaking at Multi-Chain Day also, which is going to be exciting. And then both of us are going to be hosting a marketing talk at the Hacker House, which is a closed event. It's only, there's like an invite only thing that was sent out to like some Stacks builders that competed in like Stacks Ascent and some other hackathons, but maybe we'll record it and post it or something. I don't know. But yeah, I don't think we're going to have a show next week because we're going to be so busy with all the stuff going on for Dev Connect, but we will be creating a lot of content. So you will still be able to look forward to a lot of stuff coming out there, but just not live potentially. Okay. Well, go follow us on social at Marshall Mixing, at Kate M. Parkman on X. Go subscribe to the show on your favorite podcast app. You can go to goodforbitcoin.com to see all the different places that you can go to subscribe. We are live streaming on our social handles, but also at youtube.com/@goodforbitcoin. And we will not see you next week, but have a great weekend. And we will see you online.
Awesome. Take care, guys.
Bye, y'all.
Bye.